Traders will likely be in a wait-and-see frame of mind this week as they look to some kind of progress from American politicians towards a vital budget compromise that will pull the economy away from a so-called fiscal cliff. They will also be anxious to see how American retailers fared over the weekend as the holiday retail season got into gear, and the first indication of how the Canadian financial sector performed over the last quarter. Markets racked up solid gains last week on optimism that American lawmakers can put aside steep ideological differences and compromise to avoid steep spending cuts and tax increases, which would be triggered by the first of the year. Failure to avoid those tax hikes and spending cuts would represent such a shock to the U.S. economy that it would likely go back into recession. Unlike last week when Congress was on Thanksgiving holidays, markets will be impatient to see some real progress in negotiations. Meanwhile, Royal Bank kicks off a string of earnings by the big Canadian banks on Thursday. Generally, analysts don't have huge expectations for this quarter amid a slowing Canadian economy and, more particularly, a cooling off of the real estate market, which would impact the money that banks make from mortgages. On the economic front, the major event of the week is the September reading on gross domestic product. Stats Canada is expected to report the economy grew by 0.1% during the month. Such a reading would translate into the economy growing by 0.9% at an annual rate during the third quarter, reflecting a drop in exports and emerging weakness in the housing sector. From the Canadian Press, I'm Malcolm Morrison.